Hello again, everybody. It's Harry Box, the Technical Trader at thetechtrader.com. It's Saturday, the 19th of November. This is the weekend webinar, another eventful weekend. We've had a few of them. Last week was obviously interesting in that we ran up, pulled back, and closed strongly. You can see the pattern has developed now in that 1, 2, 3, 4, 5 wave decline, reversal, and then a 1, 2, 3 wave move up before we get this little pullback, which could be wait for in an ongoing wave that could take us into a year-end rally, in my opinion, to about 4150. If it does accelerate strongly, we might even see 4300 or thereabout, which is where resistance is. This last rally in August took us to 4325. NASDAQ 100, not quite as strong. You can see the thrust is not the same as we've seen on the S&P. That's struggled a little bit more, but also a 1, 2, 3, 4, 5 wave decline followed by reversal and a deeper retest than the S&P took. Now the breakout across the double top had me thinking we're really on our way, and then we pulled back. But Friday was solid. It was up about, it was actually just a fractional gain from a loss. But we're going to have to see whether this thing can take out the highs, because if it does, I think if we get through the 12,000 range on the NDX across there, we might run it to 12,350. Or even as high as 12,850, but that would have to take out a lateral price resistance where there's a gap and a declining top line. So the angles of ascent are not as strong as the S&P 500, and you can take another look at it. The S&P's had a much better 1, 2, 3. Let's look at the transportation index. Strong, maybe the strongest advance of the three because of the move off of the low near under 12,000, 11, say 960, all the way up to 14.8. That's a much stronger advance than the others had, and it got right to the declining top line before backing off. But the pullback then bounced sharply on Friday, and from the low on Thursday to the high on Friday was a solid performance. Now, what's concerning me about all of the indices is that volume isn't as strong as we've seen. You can see the pullback in volume, but it's actually good because the pullback in volume mostly came during the period when the markets pulled back. So let's just see where we go from here. What about the small cap IWM that I follow that tracks the Russell 2000? Also a run up to the declining tops line, lateral price resistance, and a pullback. So let's watch next week the IWM. If it gets across 190, 189 and 3/4 190 zone was resistance. You get across there, you might extend this rally back up towards a 194.5 range, or even as high as 200 plus. But for now, we have to get to the declining tops line, and we do have a similar advance that we do have on the S&P 500. So that's it for the indices themselves. What about the underlying technicals? The McClellan oscillator, which had gotten up to plus 247, one of the biggest readings I've seen, going all the way back to the March, April, May lows in 2000, when the market really bottomed and then rebounded sharply. That thrust to the upside created a whole new bull market, bull phase anyway, which I believe is the same here. And I'm not going to go into why, because I do it every week. You know my theories about why oscillators pull down while the market's going higher. It's because of the breadth isn't as strong as it is when it thrusts. Although Friday was a good day for it, you can see the low. We got down on Thursday to minus 53 and went to plus 61 before finishing at plus 21 on Friday. No major big deal there. The percentage of stocks above the 40 though is significant. When at the low in September, we were down to under 8% of stocks above the 40-day moving average. On Tuesday, that reached over 75%. That means 3 out of 4 stocks were above the 40, and it remains 71%. Now, I don't know how long that's going to last, but it signals that the very strong preponderance of stocks, 3 out of 4, are on the above the 40-day moving average. The VIX indicator usually shows extreme fear or apathy. And when you're down in that 14 range or less, it shows apathy. When you're above 35 to 40, it shows fear. Right now, it's kind of neutral. Nothing to glean from that. Let's take a look at the big boys. You'll see Apple showing a double, triple bottom on a daily basis here. And that's right about 134.5. We came sharply off that low and jumped to 153 from 134.5. Now, that's a substantial pop for Apple and the reason why the market rallied the way it did. Note the pullback and then reversal Thursday, and then another retest, and then a strong reversal with an engulf. This is called an engulfing reversal bar, and I like it. It tells me that the market wants to go higher, at least Apple does. A good sign for a continuation of any bull phase. We'll see. Amazon is one of the weaker sisters right now, and I'm not happy with the way it's acting. One of our members asked me about what I thought, and I can, quite frankly, although a rising tide floats all boats, might pull Amazon back up to 104 or even as high as 110.11. This is in a bearish phase and doesn't look good, quite frankly. I would avoid it for now. I would rather go with Google or Apple. Those two look better, although in the case of Google, you can see that it's been in a distinct downtrend since it double topped up around 150. And look where it got to, right exactly to the channel bottom, the way I've drawn it. Google hit 83.45, and that's from a high of 150, so almost in half for Google itself. But it had a 1, 2, 3, 4, 5 wave decline, and that's a big reversal, right back to the declining topside moving average. So keep keen or key area for Google. If we get above 100, we can get to 105, 108. But for now, keep an eye on support around 95. And let's see if it backs and fills in coils and then makes a higher high, which I think might be the case. But we'll see. We got to get out of this consolidation zone. But Google doesn't look bad at all for me, although it was at resistance. And Apple, again, has resistance at 157.5. But once you get to that, you're looking at the possibilities of 164.5 on Apple. Microsoft, very similar to Google. Microsoft has had a distinct 1, 2, 3, 4, 5 wave decline and then a lower low. This is a left-handed extended V pattern. The absolute neckline, or we call lateral resistance to 250, is going to be key. Microsoft had a nice bounce in the last couple weeks to take it from 213 all the way up to 248. And now this little flag pattern. Now, if they can just hold this, consolidate, and then pop out through the double top, we're looking at 260 and then 267 as potential targets for Microsoft. There's a gap here. There's also a snapback high there. So that's the resistance zone, next target for Microsoft itself. I do like the fact that two lines, this one and that one, both have been taken out. It's called a fan formation, and usually fan formations will create a stronger snapback. I like the look of Microsoft, at least right now. NVIDIA had a pretty nasty decline, but this one really led the market up. That wasn't a good day for it last week, last couple of days after earnings. Nevertheless, NVIDIA's low pulled back in October at the market low at 108, and then a run up to 170. It's a huge move for that stock in a 1 month period. Well, the pullback isn't as unexpected as you would think, but now right now I'd like to see across this line where there's lows and highs, and the pullback low on Friday, which was 146.67. I'd like to see that hold, and then take a run at the high again. If we get through that, then we're looking at 180, 85, 190, and etc. So. But the other thing to consider is after a 1, 2, 3, 4, 5 wave decline, NVIDIA has broken out and retested, usually a buying opportunity. Take a look at the moving averages, crossing over. Quite frankly, I would look at NVIDIA maybe 165 or 60 calls as an option for something that, because this could be 185, 190 in the next month or so if things go the way it looks like it could. Netflix. Not acting great of late, although overall it was a leader in the last since the May, June, July period when it was trading at 164.5, it nearly doubled to 313 range. So you got a big move in Netflix, which helped the Nasdaq 100 immensely, because at one point Netflix was the most ugly chart it was, and maybe in Wall Street, having gone from 700 down to 160 some odd, pretty amazing drop. But you can see the 1, 2, 3, and maybe wave 4 consolidation underway, which should lead or could lead to the next target for me, 335. We shall see. Meta, it's also had a nice performance. These two are among the ugliest. You can take a look at this drop that Meta had. I mean, when you see the Nasdaq 100 major component go from 384 down to basically losing 300 points and going down to 88, beautiful pop-up. Now you can see that there is some resistance in this zone overhead, and there's no wonder it pulled back. What I'd like to see, they say that the bigger the move, the more likely it is to not have as big a consolidation. If it consolidates bullishly in this area, say holds 110 area, 108, 109.10 would be an ideal back in a filling. But the key is for this one is this has got, not only has to take out the short-term declining tops line and lateral price resistance, meaning above 124.5 is where I think this gets really excitingly bullish. It could be 135 to 140, but for now it's a good move off the low. You notice that volume has dwindled as the stock consolidates. That's a good thing. We'll see what that does, but it does appear to be currently, at least currently, a potential market leader. Netflix and Meta and a few others, Apple, etc. Tesla, well, this is as ugly as it gets, folks. This is just check this out, a 2-year massive head and shoulders type top. If you don't call it a head and shoulders, it's got to be at least a rounding top. And if you look at the neckline, 180 range, 179.80, it closed 179.25. Any further damage here in Tesla could, and I'm not kidding, when I look at the chart, I look at the apex of that right there, I'm seeing 145 to 135 as a potential landing area. Now, if it holds here and bounces back, it's gonna, and this is such a steep decline. But remember, it's only from this level a 1, 2, 3. This might be wave 4, so there could be one more wave down. So Tesla's the weakest of all for me right now of the Nasdaq 100 major components. Let's move on. The ETS that we follow closely are semiconductors, SMH. You can see that the declining tops line has been pierced briefly and then pulled back. Right now, we're consolidating in the zone. A wonderful run, and the semiconductor led the market from under 167 to 229. That's a very massive move for an ETF that quickly. So wonderful recovery in semiconductors. And if we can consolidate in that area, my next target is the double triple top up here at 248.50. That was your target if we do get an extension. Just watch 213. So that is initial minor support with the big one around the 205 area. Financials also had a nice recovery and also led the market higher and basically got up just near that key resistance. But I think the key to this is that the declining tops line right there was broken through. Now we're pulling back and consolidating. And I like that look. It's going to be interesting to see whether financials will continue to lead or not. But between the FAS and the SMH, you can see how strong the leadership groups have been during this rally phase. Not as excited about biotech, even though I like biotech. I just don't think it's done as well. Now, 2 things you want to know about biotech. During the market decline, they held up extremely well, but during the rally, they didn't do much. They basically have gone sideways for 2 months. Now, is that a consolidation and it's set up for the next leg up? Well, if you see XBI over 86.50, that's the buying signal, in my opinion. Obviously, the other one we follow is the triple, the LABU, very similar action, despite the fact that the SMH made a lower low, and the FAS as well. not a lot, but did. You can see that the biotechs have held up way better, but they're not participating as much on the rally. So at this point, I'm waiting to see if the LABU can get over like 840, 45 range. Maybe we can see 10, 12, 13, something like that. But for now, we're going to have to just see if this thing is a possibility to right itself and get back up and start leading, or at least following along with the other major groups. In terms of oil, I'm concerned. I told you that the USO looked very head and shoulder-ish toppy. As you can see, we rallied back in a three-wave corrective rising wedge, which I pointed out last week, but that's pulled over to the shoulder line. And quite frankly, any lower on oil, we'll see next week, could at least retest 63 and maybe get down to 59. That's the USO. The UCO is very similar. The angles of descent show a 1, 2, 3, 4. And the rising wedge on the UCO is very similar to the USO, which you would think would be the case. We have support, and your next target is 25.5. And beneath that, on the fifth wave down, 1, 2, 3, 4, 5. Oil, this could plunge to 21, 22 from nearly 30. So that's a substantial drop on the USO and UCO. Obviously, the gush is different because it's a double, and that looks a lot better. But this is more of oil and gas and has to do with the stocks, not the commodity itself. So it's interesting that the stocks are holding up better than the commodity itself. You can see that drop from on UCO, for example, from 55 all the way down to 25. That's a massive, massive drop for the price for a ultra crude oil. So I'm going forward. I'm bearish on oil for one more wave down into that zone, and we'd have to just see if that's the case or not. Stocks like APA and Oxy and the other big boys that we follow have suffered a little bit. I'll get to them a little later, but for now, I'm not keen on oil, and that's continues to be the case. What about nat gas? Well, it's interesting. Natural gas appears to have firmed up, but I'm not seeing big moves in oil, am I? But I will say this: the last 5 days in a row, 1, 2, 3, 4, 5, it managed to gain on the day. It had not so much progress price-wise, but at least minor gains in that. So it may be stabilizing down here. And I'll say on a longer-term basis, you can see we have a rising bottom line, but a slightly rising bottom line. But the awful volatility in nat gas with up, down, up, down, up, and down. I mean, which is just, is it oversold? Yeah. Can it break down? If it breaks down below 31.2 zone, it's probably going down into the mid-20s. That's boil, and that would be something considering it was 140. So be careful there. What about the opposite, KOLD? You can see that after a long 1, 2, 3, 4, 5 wave decline, it's moved up and it's pulled back. But it isn't looking pretty here. Until I see KOLD get over a 19, 19.25, it's acting weak. And so this is a very confusing picture for me for gas, and I'm avoiding it altogether, at least for now. In terms of gold, the GDX and many of the gold stocks and ETFs look like this. Big drop. In the case of the GDX, the April high was 41.60. The September low, 21.50. In half. Then a little bit of a what we call inverse head and shoulder type pattern. A breakout came right here with that big thrust. There was a nice follow through. They got to resistance, and then it rolled back. Now this could be a buying opportunity because this is a breakout, and notice the moving average crossing over. For me, perhaps the beginning of an intermediate to longer term move in gold. You'll see some big up bars here during that rally phase, and on the pullback, the volume was lower. Friday, when it bounced a little bit, the volume immediately picked up. A good sign, but we'll see if gold going forward. I may issue some gold, 1 or 2 gold or silver ETFs at some point, or stocks, but I'm waiting to see if that's the case. I think this could be right here a really interesting opportunity for gold and silver stocks and ETFs. The nugget, which is one I follow, looks similar. breaking out above the base out of the declining tops line. Now this is more of a fan formation as well. You'll see the breakout of this pattern and then the breakout of that pattern. And when you get these fan formations breaking out, they're pretty powerful at points, at some point. Over 34, the nugget can run to 40 and even 50. That's something to watch. The JNUG, which I follow as well, they're kind of sister ETFs. 1, 2, 3, 4, 5 waves down, a base reversal, inverse head and shoulders, breakout, pullback. That too looks good. So I'm thinking positively now, or more positively, on a reversal pattern with moving averages crossing over and declining top lines being broken, and in 2-3 month base patterns, inverse head and shoulder type patterns being broken and then pulling back to retest. So this again might be the ideal point to enter some gold stocks and or ETFs. I'll keep that in mind going forward. And what does silver look like? Well, AGQ similarly broke out and pulled back, but it's not quite as strong. I still like the overall potential. If gold goes, silver probably will as well. And individually, there's a lot of stocks like AU, which I like, and several others in the gold sector, AEM, Newmont, nice reversal there, et cetera, et cetera. There's so many other gold stocks I'm not going to go into right now. So that covers the ETFs. And I want to get into stocks. We have a lot of really new charts and new patterns that are broken out that I want you to see. And one of the reasons why I'm much more optimistic than most people I know, it's just when I see bottom patterns and long-term declining top lines being broken and setups that indicate maybe major turnarounds in some of these stocks, it's time to pay attention to a long side. Now, it doesn't mean we can't come down and even make a lower low, but I think basically we're in a very attractive buying opportunity in the market. We'll start off with, as we always do, Alcoa because it's AA. After a 1, 2, 3, 4, 5 wave decline, it reversed, took out the declining tops line, and even if we draw it this way, which I recommend, you'll see that we're at a point or an inflection point. Is it broken out? Well, the moving average is crossed over and it's above that. So, and it's consolidating here. If we get a pop in AA, we're looking at 59. So maybe a 10, 12 point move could be forthcoming in Alcoa. ABCL, a stock that I liked a lot back in June when it broke out and gave you a swing on it, popped and then hit secondary target before the falling wedge came in. Then it popped and formed another little kind of falling wedge or flag and broke out. And then flagged in there and broke out. Really good looking chart. I'm looking at several angles of ascent as a possibility. At the very least, we're looking at an $18, $19 stock. So keep an eye on this one. It's got some real good potential. And I like the on-balance line moving up as well. AEHR, one of our faves, and several times in the last year, a swing trade. Currently one. Pulled back, bounced Thursday, and had a little pullback on Friday. I'm not as concerned as some people in this room are, but there's no reason to be concerned. Look at this chart. Underlying technicals look good, but I will say this. On this last run up, the technicals here are indicating not the kind of thrust that I want to see, but still it's a 1, 2, 3, 4, and it may take some more time to consolidate, but eventually I think we're looking at 30 or better. Agilysis, breakout, retest, pop, wedge, breakout, retest, pop. I mean, it's just a beautiful chart. Is it near the top of the channel? Yeah. And is it extended on a short-term basis? It might be, but it also, this is what you have to consider when you're looking at charts. Is the stock in a trending phase? Is it 45-degree angles, or is it accelerating? Well, it certainly looks like it's accelerating, doesn't it? Which means if it does pop, this may be $70, $80 stock. AKRO, wonderful breakout with a major breakaway gap on drug news, and then that. This is what I always look for after I see that move. If the opening gap, and that I think was 28, holds for a period of a couple weeks and then starts to move up, it's usually a buy. And look at this one. Popped out and then ran, and it got all the way from 28 up to 45. A nice swing indeed, and now it platformed and broke out, but it did pull back Friday. Bottom line is all-time highs for a biotech. Got to pay attention when you see that. For me, I'm now looking at this as your rising channel. And it's a beauty. And it tells me we're headed to 50-55. Ambarella, I'm putting it on my list as of this week. Now, many of you know that after a long bull market, this formed a little head and shoulders, broke down and formed a bear flag, at which point I put it on my boxer shorts list at 155. Well, a year later, it was 49, losing 106 points. There was one time when this stock broke out there, but notice lack of volume, and as a result, roll over Beethoven. And now we're getting the breakout that I'm looking for. Notice this is important, folks. When I look at moving averages, if I see a stock run up with a breakaway move like that, notice there's a gap there. So that's resistance. It got right to it Friday. Can we punch through it? It may not be that easy. It may have to back and fill in here. But if it punches through and then pulls back, we're going probably to 91, 92. In any case, the moving averages are crossing over. And anytime I see a pop across the moving averages cross over and the stock backs off, even for a few days, it's usually a buy. This is a really significant day for Ambarella on Friday. Yeah, my target's 91. AMPX, this is a fairly new IPO. It came down, it's quite volatile. They spiked up, orderly retrace, exploded, sideways coil, narrowing near the apex. Something to watch for sure, and above 11, it's rock and roll time at 13, 15 or more, I think. We'll see, keep your eye on it. APPS, now here's a stock that many of you may remember, one of my biggest winners ever. One of my institutional clients told me about it at $1.12. I wrote it down, I remember. I didn't get involved with it until it broke out here above 3 3/4 or so. Maybe it was 2 3/4. Nevertheless, it went to over 100. And came down with the market in an orderly channel. But look what happened 2 weeks ago. A huge breakaway gap, I believe, on earnings. It literally went one day from 10 3/4 to close the next day at 17.33. And then with a follow through the next day, almost 20. It did reach 2040 a couple days after that, and that's right at that level, 2042. Isn't that amazing stuff? Anyway, overhead resistance caused a pullback, but the pullback has come on a much lower volume with I think is a good setup, and I'm likely to put a swing on this one, my opinion. You can see the moving averages have crossed over, very bullish turnaround, and probably on the road to a 1, 2, 3, 4, 5 wave move that takes it into the high 20s or more. Keep your eye on apps. ARDX, what a week this had. Note the gap here and note where it is there. Right up to that gap, that high was 215. Friday's high, 219. The close, 204. Either this pops immediately and gets up to 3, or it's going to back and fill. Either way, I like the look of this, and there's support right about $1.55. Now, I don't usually talk about stocks under 2, but this is a powerful pattern and maybe a major turnaround. Keep an eye on ARDX. ARQQ, another reversal through a declining tops line with a massive spike move that takes it initially from 380 within a couple weeks to 1067. This is a triple, and now the pullback. First pullback opportunity, perhaps. I'm not happy with the big downside volume there, but who knows for what reason or whatever. The bottom line is this is a breakout and a kiss back or pullback. Moving averages have crossed over. And based on this move here, this could be 13 or even 18 in the next few weeks and months. Keep an eye on ARQQ. ARRY. This is a tech trader swing. This inverse head and shoulder got me interested. It broke out right there. That's where the swing was initiated. It ran to target number 1 and pulled back and formed a little mini inverse head and shoulders and broke out with a breakaway gap with big volume. And then it pulled back and it's backing and filling in a wedge. I just think that it's going to retest 24 and eventually get up to 27.8 or more. If it reaches the top of the channel, obviously, you can see high 30s. That's a solar stock. Actinium, another biotech turnaround, runs up to resistance, coils, and breaks out with a thrust. This move took it from under 7 to 15, more than doubling it. Now, we got a 2.5 week wedge. Keep your eye on this puppy because if it runs, we might see 19 on it. Something to keep an eye on. And your stop. I want it on the 10.5. AVDL, I've been watching the stock for 6 months. Pop, coil, pop, coil, pop. 5-wave advance, longer consolidation. Breakout, retest. Explode on Friday, or at least it popped 15%. If this should get quickly above, say, 865, you might see the stock at 11 pretty quickly. Keep an eye on this one. This has got strong bullish tendencies. AXSM, when it popped out here and formed a wedge, I put a swing on it. To reach target number 1 quickly, pulled back and retested, pulled back and exploded through it, ran up to 70 from our initial area in the mid 30s, so a double, and then a pullback, creating a new trend channel, in my opinion. The breakout came there, it went to resistance and pulled back, right to support, and had a big engulfing reversal bar on Friday. Keep an eye on AXSM. Stop is under 49.5. My target 65, 72, et cetera, et cetera, et cetera. Looks good long term. I'm hearing take out at 100, who knows? BAND, a lot of software stocks that were market leaders like this topped out and came down hard. This one dropped from nearly 200 down to under 10. Below a month ago, 920. Last week or the week before's high, 24. The stock 150% off the low with a breakaway gap. Breakaway gaps are important. People always talk about that. It's got to fill the gap. Well, guess what? It may take years to fill a gap. That rule is bunk or debunked about filling gaps. Gaps are much more effective for me as support. To me, under 16 is a stop. But here, under 18.5 might be a stop because that's support level number 1. But in this case, it looks like a rising channel, which could get you into the high 20s. That's my target. Bluebird. Well, when it popped out here, I put a swing on it. I reached the first target and then back in the field. It retested and pulled back, and retested and pulled back. If it gets through this triple top area, we're probably looking at a stock that could reach somewhere near that next resistance zone. And I'm not kidding when I say it could double from here to from 688 to like 12.5. But we'll see. There'll be some stuff in between perhaps. BTU, a stock we've been following for 2 years. A beautiful inverse head and shoulders or right hand extended V. The breakout occurred there. The retest occurred there. It did a long 1, 2, 3, 4, 5. And now it's gone into a more consolidation range. But what has this done? It's created a nice base over the last 6, 7 months that could set up a big move. If we get this above 30 for starters and take out 33, you're on your way to at least, I think, low to mid 40s. Keep your eye on this one. It is consolidating in a wedge right now. That's BTU. CABA, something new I've been following, which dropped from 15 down to literally 50 cents, 59 cents. Spiked up, flagged, popped, flagged, and popped again. A mini, 1, 2, 3, 4, 5. So is it extended? Sure. It's gone from 59 cents to almost $4. So like, talking a 5-fold increase in about 6 weeks. But is momentum strong? Yeah. Can it get a higher level? Yeah. It might even reach up towards the gap where it is looking at 7. But for me, you got to be awfully careful in here. Very, very easily could pull back and retest the 2.5, 3 zones. Stay tuned on that. Put it on your watch list. CGC. I'm still of the opinion that marijuana stocks have made their long-term bottoms. And the reason I say that is after a long decline from 58 or so down into the 2 range, it rallied, pulled back and retested, almost an exact double bottom, and then exploded off that low with big volume. The pullback wedge, lower volume. Run up, volume increase, not as high as I'd like to see, and as a result, the stock is backing off again. Wasn't a good day Friday for this one, down 10%, but overall, I still think marijuana stocks in general are trending upward. My target's 5.5 and 6 3/4, 7 for CGC intermediate term. Clearfield, which is a big winner for us when I put it out on the breakout there at 71 and change, went to 130. A 60-point run up in about 6, 7 weeks. That was a wonderful swing. You saw the falling wedge, the pop, the retest, the pop, and then a hard drop. But boy, what a recovery, especially Friday. Up 26 points or 28% on Friday alone with good volume, one of the bigger volumes we've seen in the last 3 months. If you get through this triple top, we're looking at 150 or better. Coupang broke out there. I put a swing on it. It reached my targets and then pulled back and consolidated. Retested, pull back again, creating a longer term uptrend. But now with multiple tops and resistance. Coupang needs to get above 21.5 to really get going. If so, mid-20s target. CPRX, a beautiful run from the June lows that saw it go from 6 and spike up to 17, nearly a triple in about 3 months. Then the hard pull down that tested the gap and held it, retested, broke out, flagged, and popped, and now is wedging. I think this stock has designs on higher levels. My target's 18.5, and now look at the low 20s. We'll have to just see on a longer term basis if this is the angle that it wants to take or not. But when you draw trend lines, and parallel lines might be in play. So let's look for 23.4 if it gets over 18. CROX. As many of you know, it was one of my favorites up here on the long side, and then it was a tech trader swing short when it broke down, and I believe it was right there at 150, right? When it broke that first trend line. It went from 150 to 46, losing more than 100 points in about 7 months. The reversal came there as it broke out above that declining tops line. Pulled back and tested it, ran up to resistance, pulled back. Excuse me. Did a perfect 1, 2, 3, 4, 5 wave advance, got to resistance and back and fill for months. Broke out recently. Looks like it's headed to 1, 10, 12, 15. That's my target. It's a beautiful chart. Up next, DAIO. Long-term declining channel with a 1, 2, 3, 4, 5 wave decline. There's your breakaway gap. When it popped up and pulled back, it pulled back near that double top and held it. This looks very good. There is some resistance at 430.35, but if we get through that, it could be a $5 stock. It's trending and it's reversed. The moving averages have crossed over. Put that on your watch list for a potential turnaround trend. DGII, well, how about that stock doing a market pullback? From the May low at 18.19 to the low 40s and still trending. This stock has made new all-time highs ever. And with that kind of a chart and a pop on Friday of 270 or about 7%, this stock doesn't want to go down. And it looks to me like potential on it would have to be at least, I would have to subdue this angle a little bit. Let's just say it's a $50 stock if things go the way it looks like it could go. This is one of those stocks with momentum to keep an eye on. DGII. In the oil and gas area, there's several stocks. I'm not going to highlight all of them, but you know, with the market pulling back on oil, some of these just aren't. Look at DHT. Now, is it extended here? Well, yeah, this one's near the top of the channel as well. I wouldn't be overly aggressive with it, but when you're looking for momentum, and oil stocks are new all-time highs. Well, this isn't one of them, but take a look at the 10-year base breakout. One of the things I like about this one, I just included it. It's basing out for 10 years and just broke out. This could easily be mid-teens, maybe higher. So something to keep an eye on, particularly on any pullback in the oil group. DXCM, Dexcom is another new one. Big run up, and this is up here means this stock has split. From a split adjusted basis, we're talking, how about this one? In 4 years, 11 to 163. Then this big decline. Now, after forming a bottom pattern and holding support there for a couple months, that's the breakaway gap. There's your pullback retest. There's a new rising channel underway. It's a 1, 2, 3, 4. I think a fifth wave may be due, which could test 135. But I just wanted to show it to you because it's one of those unusual biotech stocks with a fantastic chart and a nice consolidation here to set up another move, maybe. Put it on your watch list. ELF, I'm upset with myself. I saw this breakout here. Look at the volume. And I saw that flag there. And I knew the stock's going higher. I never did a thing. And that was in the $30 range. On Friday, it hit $55.90. Not even a pullback while the market was getting hammered. Always a sign of relative strength. And they say that the stronger stock is in a down phase, the more likely it is to lead in an up phase. Well, check this out. How about this for an angle of ascent? Super, super, super strong. Is it extended long-term? Absolutely. It's at the top of the long-term channel, so I wouldn't be aggressive with it here, but certainly momentum could carry this higher. EPOW. Note that in the last 7 days, the stock is up a little bit every day. The volume is very low. It's a thin stock, but when it goes, boom, 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 and I think another boom's coming to take us to 5-6 range. Keep an eye on this one, and I mean early next week. EURN, another oil and gas stock similar to what we just saw in DHT. Very similar chart. Look at these two. Also near the top of the channel, and with oil coming off, all of these stocks might be vulnerable, but they're very strong right now. EXTR, after coming down hard and rallying strongly July, August, September, it formed a wedge. That wedge broke out, and look at the way this stock is running. Telecom equipment. My target now, 22 and 25. Great Momo. FCX, well, I put a swing out on the copper stock when it broke out. I think it was there. It then pulled back and ran, and now it's pulling back again. The price of copper pulled off a little bit last week, and that's why the stock came down. But overall, after a 1, 2, 3, 4 truncated fifth wave base breakout, it looks to me like this could go into the low 40s. FDMT, it doesn't get much stronger than that, but I warned you all, the stock goes literally ballistic from under 8 over 24 and does 200% move in about 7 or 8 days. It's time to really be careful because the stock not only is at lateral price resistance from that zone, but it's short term, such a steep angle of descent. It's due for a pullback and maybe a steep one, so be really careful. Does it have momentum? Can it go higher? Always can. But the risk reward is not good here. Engineering construction firm Fluor. Long-term trend is gorgeous. The multi-month consolidation broke out. And what's it doing now? It's flagging. Yeah, you know what? The next target is in the mid 40s. Keep an eye on this one. It has a lot of room to run. FNGR was a monster. I mean, just a monster for any stock to go from 62 cents in 2 weeks to 980, almost 10, and go up 15-fold that quickly. It's going to go into a period of digestion, which it's doing, but it's doing it rather nicely. It's a beautiful bull coil, folks. Now, obviously, it's always subject to a deeper retrace, and especially if it breaks 4.5. But anytime, at any time, this stock could pop, 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 and be back to $8 or $10. Keep an eye on FNGR. Fresh Pet. Sure looks like a long-term downtrend here, but after a big 1, 2, 3, 4, 5-wave decline, it reversed. The moving averages crossed over. Note that the pullback here to the moving average, while the long-term moving averages crossed over. It was a buying opportunity, and sure enough, it went from 52.90 to 70, near resistance, and back off a little. Nice new trend underway. We'll see if that extends. The key to this one longer term is that it gets to mid 70s and then runs up into the 80s and 90s or more. And my favorite solar stock of all time, First Solar. Anytime you have a massive breakaway gap with volume like that, that day it's traded almost 10 million shares, which is really big volume for First Solar. It ran up, it pulled back, it created a new rising channel. It then broke out above the high, it back then filled above it, and it's channeling. Boy, does this look good. If solar continues even somewhat positive, my projection is this stock is going to 200 to 225. No kidding. Great chart. GFF. Now, Griffon is not a stock I've been watching of late, but I saw the pop on Friday. When I looked at the chart, I said, you know what? Not only is this stock broken out through a key multi-month resistance zone, but it's at all-time highs. This should be a swing, and it very well might be. I'm going to keep an eye on that early next week for a possible swing entry into the 40s and low to mid 40s, I think. GPS, another stock that I haven't followed closely, but Gap is a retailer that had a nice uptrend and an awesome ugly downtrend that saw it go from high 30s to 8. Now the double bottomed at 8 over a 3-month period and took out the declining top sign, took out resistance, backed off, and then spiked on Friday. Feels like it wants to go. 15, 15 and a half, and 19 of my targets. Keep an eye on that retailer. GTII, I've been told that the same people that were involved with what is that stock we just looked at? Finger. The same people involved with Finger are involved with GTII. Both of them have massive run-ups from half a buck into the high single digits. This one pulled back hard, bounced, and now is wedging near the apex. Note, GTII wedging, Finger coiling. I'm not sure either of these stocks, two stocks are going to go again, but they're both set up to do so. Keep an eye on both for now. Up next is GXO. This is a spinoff from XPO Logistics. And after the spinoff and run up, that's so I go to 105.6. It came all the way down into the 30s. A little mini base formed. It broke out with big volume and pulled back. What's happening? The moving averages are crossing over and the stock is pulled back. I think it's a buy right here. My target, 53.55. Maybe a neat little option play. Let's take a look at the 45s. Hudson, been on my list for a year and a half. What a rising channel. They crushed it to 35 cents in 2019. A massive 1, 2, 3, 4, 5 wave decline. Look at the uptrend. And it's still going, but over the last several months, it's been consolidating. Note the flag just under resistance. Should this one get above 1134.5, that's the area to watch. I'm looking for 14, 18, etc. This could be a big runner. If it continues this trend, of course. HLIT, in the midst of all of this tech stock debacle, Harmonic went from 840 and doubled to nearly 16. In a 1, 2, 3, 4. Friday, it spiked and maybe starting wave 5, which could take you to 17, 18. Stop is under 12.75. Biotech stocks, there's a few that look really good, and they all begin with I. Imara, coiled, breakaway gap with big volume, beautiful pennant. Another breakaway pop, and now a rising pattern. I don't know how far they take this, but it looks like 6 3/4 and 9 are targets. Keep this one on your list. IMBT is the other, or another breakaway explosive move followed by a little flag and then a rising channel. Now, I don't know how far they can take this, but boy, if this just maintains this angle, right? I'm looking at 17, 18, potentially. AMBX was a swing of ours here. It did very well for us, but then came down hard. Broke out again, platform for a bit. Thursday it had an unusual hit down to the moving average and bounced, so it needs to hold it right there. The key is going to be above 35. I'm looking for 45. INMD is a tech traded swing when it broke out there. It backed off and popped, backed off, and then popped again and made a new high. That was the highest level achieved since March, but it did pull back Wednesday, Thursday, Friday. So this needs to hold, in my opinion, right about there. I'm not going to have a lot of tolerance under 35 or so, but my target remains a retest of 39.40 and then mid 40s. ISEE, very volatile stock. A 3-day explosion that saw it go from under 10 to the low 20s, then a 0.375 Feb retracement and a pop to new highs. Then a really steep pullback that took out support, which at that time was right there. But look at the breakaway pop snap back on Friday, jumping 458 or 27% on 12.8 million. So the target's now at 24, 27 if this does extend. Friday's low would be a stopping point for me at around 20. Juniper, don't often talk about this one. It had a nice uptrend for a while. It did started to look ugly here, but look at the breakout on Friday. And the strong bid and ask at the close tells me this might go higher. My target's at 33, 35, and eventually a retest of those highs in the 37.8 range. Keep an eye on this one. It broke out on Friday, and the moving averages are crossing over with a consolidation. Looking good as a turnaround candidate. Juniper. Biotech. Kinexa Pharmaceuticals. What a nice move. Actually, when you take out the blowout, or the what I would call it's kind of a blow off extension. It broke out through everything, but it's at the top of the long-term channel, and it's also near resistance. Next target conceivably could be 19. That's my target. But for starters, I'm looking to see if there's a follow-through breakout. Notice that consolidation for the last 4 days up here. Either one of two things happens. It accelerates to 19, or it pulls back and retests 14, 15. We're going to find out soon. Nice chart, though. LVTX, when it popped and pulled back, I put a swing on it. It didn't work. It came down and partially filled the gap to test those levels. But what a wonderful recovery. From 332 to last week's high of 555, very nice recovery. Notice the double top now. So keep an eye on this one, because above 550.55, I'm looking at 6 3/4 and 8 1/4. And GNI explodes and pulls back. A bearish engulfing day Friday, we'll see what that means. But for now, anytime a stock goes from 5.5 to nearly 12, more than doubling, and it does it in a week, and then pulls back, the ideal scenario is it backs and fills for a bit and then breaks out and goes. Good chart, long-term declining pattern broken. Moving averages crossing over, stay tuned. MGNX is a tech trader swing when it broke out right there, I believe. Then went from about 4 to 7.5. Hit my target, by the way. The next target is 10. The pullback on Friday was rather dramatic, but this is called a bullish engulfing reversal bar. Now, it didn't close great, but it closed with a gain, and it finished with a big tail. I think that's bullish. And I still think that's, if this gets through 7.5, we're going to 9.10. It's a tech trader ongoing swing. I like it. Momentum, long-term downtrend, breakaway gap, moving averages cross over. It consolidates for a month and then breaks out. Then pulls back at Friday, reverses. I like the look. Targeting 8 3/4 and 10 3/4. Merck, one of my two favorite long-term company, my two favorite biotech companies. My three are Amgen, Merck, and Bristol Myers. Those are just my favorite companies as companies. Now, there's a lot of other ones, obviously. I love Lilly too, but it's a $300 stock. Merck, on the other hand, look at this chart. What a move off the 09 lows. The stock, in essence, has gone from 25 to 105 and breaking out to new all-time highs. I think it's an all-time high. Yep. So where's this headed? One cannot tell, but I will say that momentum, the way it is, my target's 1, 10, 12 for starters. Nutanix. Well, I like this company a lot. I think it's a takeover candidate at some point. It got crushed. In September of last year, it reached mid-40s. At the debacle in June, it reached 13.5. After running up, breakaway gap, pullback, three-wave corrective flag, another breakaway gap. This is called a breakaway. This is called a running gap. When it does it again, it's called an exhaustion gap. We haven't gotten there yet. But I do think you're looking at 32, 38, 40, and maybe a takeover up in that area. We'll see. The support right now in Nutanix is 25, 90, 26. Love that chart. When is OIIM going to make a move? After a beautiful move that saw it go from $1 and go up 11-fold to 11 1/4, had a 1 year, 18-month decline, and then built a beautiful triple bottom base and breakout. But it didn't break out above that, and now has massive resistance at 4.5. And once you get to 4.5, 5, 5 1/4, and then 5 3/4 would be minimum targets, but maybe much more. Just keep an eye on it. The platform, it looks like it wants to try to break out. OM, well, OM with a big pop, 3-day run, and now flag tells me moving averages are crossing over right there. See it? This is a $22 stock, $26 stock going forward, in my opinion. PACB, one of our favorites, and a swing. When it broke out, we put a tech trader swing on it. I think it was around 7, 6 3/4, something like that. Well, it finally got to my target and reached 1237 Wednesday before pulling back. Almost a island reversal, so careful. I don't want this one under 9, 9.5 area. The target's 14 and 18 if it runs, which I think it might. Puma, beautiful base, inverse head and shoulders after a long decline. Look at this. In 2017, this was 137. Well, eventually they got it this year down to, that's right, $1.60. Incredible. Look at the run up in the last couple of weeks, and then particularly Thursday, Friday when it reversed and spiked up to near resistance. The key is going to be this reversal high at 407. If PBYI gets to that, my target's 5 quickly, I think. There's a gap there, so we'll see. PDSB, another beautiful biotech. After a beautiful multi-wave run up and saw it reach the mid-teens, it dropped down into the 2-3 range, double bottomed, ran up to resistance, wedged, broke out, breakaway gap. Beautiful run up last week. 637 to 10. A 50% run up in a few days, right to resistance. My next target, 12. I love the way it looks, but I'd love to see it come down and set up a better entry out. Perion, as you know, one of our bigger winners at 5 3/4, ran up into the high 20s. It's taken now a year to consolidate, but is it breaking out? The last earnings report was strong enough to propel the stock from the low 20s to nearly 27. It came down Friday and then bounced, so you have resistance here. Keep an eye on this one over 27. I think the stock is 31, 32, maybe 33. Prophase, breakout, retest, back and fill from a large wedge. You can see that there's big resistance at 15, 16, which is my target. Should you get through that, it's going to be a home run. We'll see. Purple was a big winner for us. Went from 6 3/4 into the 40s. I think it hit 40. 39, yeah, it hit 41. How about 41 down to under 3? And then finally a base pattern formed, but there's your breakout. There's your first pullback after the breakout. The moving average is already crossed over. Purple is a stake trader swing. I like it unless it breaks 4 1/4. But for me, 6 and 8 are targets, and I think we get there over the next few weeks and months, potentially. How about this RELL? It just keeps going up. I've never put a trade on it, whether a day trade or swing, but it just keeps going up. My target, 28. Big reversal on Repay Holdings. A lot of software stocks reversing. Here's a stock that was trading in the mid-20s. It crushed it down to 4. What a reversal 2 weeks ago, or a week and a half ago. From a close of 438, it opens at 585, runs up to 7 and change. It continues and pushes through to get up to 844. Well, it's the kind of stock that I think has extension potential to 9, 10, 11. Stay tuned. It's a good chart, and it looks like if it pulls back any further, it might be an entry opportunity. RPTX, another biotech with a decline, pop coil breakout. Elected Friday up $1.30. That is a new 2022 high. Your next target is right about 23 3/4. So watch this one. RVPH is a tech trader swing. I don't recall exactly where I gave it to you. It might have been there, but this stock looks fabulous. 1, 2, 3, 4, 5. However, I'm thinking this is 1, 2, and this is 1, 2, 3, 4 of 3. That we have one more wave up before the third wave finishes, and that would get you to 8, 8.5. Rhythm, one of our best swings of the year, maybe the last 2 years. When it broke out here, I put a swing on it. It popped from 4 3/4 within 2-3 months, was up 31, and now it's consolidating that big move. But it isn't dropping down, is it? Keep an eye over 28.5. It could fly. Seed, an 18-month inverse head and shoulders. And near term, 1, 2, 3, 4. I think the fifth wave gets us to the mid-teens, maybe high teens. I think that's coming soon. It's a personal holding. SHLS, solar stock with a 1, 2, and 3's underway. This is a breakaway move. Resistance was right there. We exploded through with a gap. You can see the way it looks here. Targeting 36.7 and 42.3. STIM in the biotech sector broke out of a base and it's just gone vertical, but there's going to be resistance in this zone. Next target is 685.7. STNE. I'm showing you this because this was a real big winner in Wall Street and went from it was a foreign software company, I think South American. It went from 19 to 93. Then the big drop. Now a beautiful coiling base pattern. Just keep an eye on it because if it breaks out of the base, it could just pop, pop, pop. I think my target is going to be on a swing to 19 3/4. STNG, well, how about this in the shipping group? Back here, I remember this was trailing most of the stocks in the group, but it sure made up for it there. Look at that run up. So this year alone, just from January's low, 11 to 53, five-fold increase. It doesn't look done, does it? Target 62. In the biotech sector, Sutro Biopharma dropping from mid-20s to 333, popping and coiling for a few months and breaking out and now flagging or consolidating this group. My targets are 9.5 and then the gap here at 11.5. So keep an eye on STRO for a move that extends to those levels. Technoglass, nice run up, big move from 2 to 33, and then a multiple month consolidation base. But look at what it did last week. It took out a double top on Friday, popping 248 or 8% or 9%. And it, excuse me, I like it for a retest near 35, and then we'll see where it goes from there. TH with the 1, 2, 3, 4, the fourth wave broke out and then it backed off. Might be ready. This one gets about 14.5, a good rock and roll. 16, 18, 19, 20, something like that, possible. TMDX, wonderful reversal bar right there, which triggers your major uptrend. It literally took a stock from 10.5 to mid 60s with a target now, believe it or not, in the high 80s. TRMD, one of those junior oil stocks that just can't, it's unstoppable. From 6 to 30 some odd, with a channel that tells me if it continues, we're looking at mid 30s. My only problem is after a 1, 2, 3, 4, fifth wave up, we need to keep tight stops on it, perhaps under 26.5. I don't want to see this drop with the oil group, but it's great. Well, Hostess Brands, which makes Twinkies and other baked goods, has been a beauty. And I've been looking at this since it was 12 and then 17, but never put a swing on it. I don't believe I might have. It's made it into the high 20s. It's a beautiful chart, but it came off the top of the channel. We'll have to see. The next target is 30, 31, but it's dicey and risky, and the risk reward on anything that's gotten up that much is always vulnerable, but also it's got relative strength. A lot of food companies. Look at ADM, Archer Daniels. I noticed that the other day. This stock's gone in a couple of years from 45 to 100. For a food company, that's an extraordinary run. Look at the long-term chart. Actually, from the 20 low, it went from like 27 to $100. It went up 300% basically. Back to where we were. Another junior oil, Vista, powerhouse move from under 2 over 13. Doesn't look done yet. Again, though, I want to warn everybody that anything this strong in a group that's vulnerable might also be vulnerable. Just keep an eye. I like this Verona Farm. This was an explosive move and then a 3-wave corrective. It also formed what looked like a little inverse head and shoulders. There's your breakout, and that's a bull flag, folks. Keep your eyes on VRNA. If it pops, it could be 14, 19, 20, whatever. It's a beautiful long-term breakaway move, and now consolidating for the next leg up potentially. BRT, inverse head and shoulders. This is a tech trader swing. It's backing and filling in here. It wasn't a pretty day Friday because it looked like an engulfing bearish bar. Stop under 13, 13.25. But if it rights itself and then takes out 16, we're looking at 18 and 19. Nice inverse head and shoulders, has me interested. Zyme, ZYME, long-term base and a breakout. I put a swing on it and then backed off, but it's firmed up again. I really believe the stock is headed for 11 and 14. Those are my swing targets. And finally, Zixi, how about that move? I've been yelling at you for 2 months about, and this is a personal position of mine. And full disclosure, I'm out. I took the trade. The stock went from 8 to 14. Friday it spiked to 14.55. Got right to my target zone. So for me, and near the top of the channel, it was time to exit. Doesn't mean it can't explode, but you got to take the risk reward off the table at that level. Now that's a look at the longs. I do have some shorts just to review real quickly. It's not an active list. It's a list I'm following. I'm not keen on shorting up here. I know that some people think the market has one more leg down, and it might. So keep an eye on these stocks because they do look ugly. Still, look at the line right from that topping pattern and that fall down bear flag, what it did since then. Massive waves down. And despite the rally recently, it doesn't look good until it breaks out over 230. And it very well might, if there is a leg down, take out 170, drop down into the, my target's 135.40 if it drops below 170. ABNT, massive top, breakdown rebound to the declining top line, and they got crushed. Rising wedge, slam dunk. Another rally back. Look, until this one takes out, let's call it 36, it still could be bearish and lower. With eventual targets, if it breaks 28, down to 23. AYX, big uptrend, long downtrend. This drops from 170 to 40. It did bounce and then back off. If it continues lower, I can see targets in the mid 30s or even lower. BILL, big uptrend like many other tech stocks, and then 1, 2, 3, 4, and then maybe a fifth wave truncated, or if it isn't shortened and it breaks this area, Katie bar at the door, the stock can be cut in half, even from here. CDNA doesn't get much uglier than that top and that bear wedge right there, which is where I said shorted at 49, I recall. Down to 12. Does it look done yet? Well, Friday's action didn't indicate that, down to $1.71 or 12%. Feels lower to me, looking for 11 and maybe 9. Coupa, again, another example of a tech or software stock with a big run up. There's your breakdown. Sliding channel. Rally back to resistance and roll over. Targeting 37, 32, and who knows where. Of course, cover at any move above that zone. CBNA, one of my best picks of the year on the short side, has moved from about 150 to single digits at, believe it or not, 6.5. Bounce and pullback doesn't encourage me as to whether or not this is a bottom. As a matter of fact, it could even go lower. And if it does, you're looking at 6 or less. ESTC, long-term decline, had a nice bounce in May, June, July, August, but it couldn't get through that resistance area and rolled over. Double bottom to bounce, but look at the pullback. At this point, unless it gets above 69, my targets are 51 and 41. FIBN, massive top, breakdown. From the bear wedge there. Failed at the declining tops line. From the larger wedge, broke out. Couldn't get through the prior high. Making that to the declining tops line. Then rolled over hard. And basically is looking like this right now. In my mind, unless we get a pop quickly above 67.8, the stock could retest 53 or even retest 47 or worse. Garmin might be breaking out, but after a long decline, which we spotted after it broke that mini head and shoulders, and then a rising wedge and a bear flag, kept stair stepping its way down, and it's gone all the way from 170 down to 76 before bouncing. Now it might be breaking out. I would say yes, cover over 95, but it also might be a rising bear wedge or bear flag. Let's look at that as a bear flag, see it? So if we take that trend line and put it there, and there, it still looks to me like a declining channel, doesn't it? If it breaks out over 95, as I said, cover, but a rollover here could get it down into the low 80s, high 70s, maybe even lower than that. MDB, head and shoulder top, breakdown, rising wedge to resistance, then a big rally, rollover, hard, declining pattern. But look at this. Pretty nasty decline, but it did bounce off the bottom of the channel weekly, in my mind. At this point, I would stop over 200, 205, but a lower level could get it down into the 135, 40 zone again. Monday, big drop, pop, and then a rollover and a snapback. Stop is over 115. The retest is 75. There's a lot of room on that one. Cloudflare, breakdown. So 1, 2, 3, 4, 5 waves down. Slightly lower low and a bounce. Near resistance and rollover. A retest may be in order or a lower low. The stop would be over 60. Overstock. Well, this has been in a downtrend for a year, taking 105 down to 20. I don't know if it gets over 127, 7.5, it will be a cover. But for me, the downside potential is still lower levels into the mid to high teens. We'll see, especially with what's going on with Bitcoin. Robert Half, tech trader, swing short there at 99. Eventually got down to 65. Bounced. Only if it gets above 83 would I cover. A move below 71 would call for 65 and 61 as targets. Ring Central, wow, what a drop. 440 into the mid-20s. It finally bounces and pulls back. Not sure what this wants to do, but it's definitely a cover over 42.3. XNOW, big drop and a nice wave rally. It retested and broke, snapped back, and failed at the declining tops line. Only if it holds here and runs out would it be a bull. I'd be bearish if it broke down below 139 with targets at 123 and 110. SSTK, 1, 2, 3, 4, 5 waves down and finally bouncing. I'm going to redraw this trend line to look like this. And if it gets above the weekly high, 56.5, I'd cover. But if it starts to drop below this 49.50 zone, we might see a retest in the mid 40s and something lower than that. TEAM looks terrible. Head and shoulder top, breakdown, rising wedge. Let me show it to you. It's more of a bear flag in my opinion. Then the rollover and then the rising wedge. So it looks like multiple waves down and finally broke out. Didn't last long as the rollover made lower lows, bounced and pulled back. I don't know where this goes, but if it breaks here, we're looking at 90 bucks. Tandem. Breakdown came right there. In my opinion, it came right there. Rallied back to resistance and failed. You can see how ugly this has looked. Tandem's dropped from 155 to 34, 33, and bounced. It bounced right to resistance. And it's forming what I consider an ugly bear flag again, or bear wedge. And this is very vulnerable, in my opinion. So careful on this one. Any move above Wednesday's high, that's where I cover, above 43. But any roll over here could get you at 34 or even lower. CROX. After a long run up and a split, the stock breaks down here, runs bear flag after bear flag, and now trying to bottom in here. The stop is over 52. The target's at 40 and 34. TTEC topped up here, came down and bounced off of here, rallied back to resistance at the declining tops line, and just faded away. From 75, the stock has dropped in half. Well, not quite, but down to 39.40 and bounced rather weakly, if you ask me. Technicals don't look good. Yeah, above 49.50 I cover, but for now it might roll over and it's retest 40. Upwork tried to bounce right to resistance and failed. Therefore, that's your new declining tops line. Here's your channel bottom. The way it looks now, this stock is getting really ugly. Move over under 11 could get you to 9 3/4 or worse. World acceptance broke down there. You can see the 1, 2, 3, 4, and a massive 1, 2, 3, 4, 5-wave decline. It did bounce, but it's pulled right back to support. It doesn't look like a bottom to me yet, does it? I don't know how far they can take this down, but it wouldn't surprise me to see 40s or 50s or even 40s. Zoom, everybody likes Zoom. I don't. Not until I see a breakout over that. There's a gap and resistance there. Over 90, cover. But a move down below the 75-80 range, and we can see 70, 65, and even 60. And finally, Z-scaler forming a kind of a head and shoulder top of the rising wedge, breakdown, a rebound. You can see the stair step 1, 2, 3, 4, 5-wave move, but it didn't do much more than rally back to the declining top sign, then roll over hard. It's still quite ugly, but it does have potential. If it gets above 155, I would wait. Any move under 150, 135, excuse me, 134 could drop it back down towards the 12, 15 zone, or even worse, a long-term decline to 85, 90. Not pretty, but we'll see. Anyway, an exhaustive look, as usual, at all the indices, underlying technicals, the NASDAQ 100 generals, the major ETFs that we follow in all the groups: oil, gas, gold, silver, etc. And then a look at a bunch of longs, about 85 of them, and about 25 charts. So that's it for this weekend. Please review this often as much as you can to get prepared for next week. It's going to be important. This is HB wishing you a wonderful rest of your weekend, and I'll talk to you guys later. Bye for now.